Last month's non-farm payrolls fell far short of expectations, which confirmed the Fed's decision to implement its second rate cut of the year. While Trump's presidential victory raises questions about future Federal Reserve rate decisions, Chair Jerome Powell has indicated that near-term policy will remain largely unaffected by the election results. The focus now shifts back to U.S. jobs and inflation data to determine whether the Fed will cut rates again in December 2024. In this video, we'll break down the November NFP and explore its potential impact on currency pairs, commodities, and stock markets. The November non-farm payroll numbers will be released on December 6 at 4:30 p.m. GMT3. Watch until the end so you don't miss out on the potential trading opportunities in the market. Before we move on, don't forget to hit the subscribe and notification buttons to stay updated with the latest trading insights. Last month, the employment figures were heavily hit by the Boeing strike and hurricanes Helene and Milton. The October NFP shocked the market with just 12,000 new jobs, missing the 140,000 estimates by a jaw-dropping amount. Despite the weak headline, the unemployment rate remained unchanged at 4.1%, while wage growth came in slightly above expectations, with average hourly earnings up by 0.4% month-over-month and 4% year-over-year. The weak non-farm payrolls numbers fueled near-certain hopes for a rate cut, which caused the US dollar index to decline immediately after the data release, and briefly retraced from its previous upward trend before resuming its rally. Meanwhile, gold prices saw a rise driven by the dollar's short-lived weakness but quickly fell as the dollar regained strength following Trump's victory in the US presidential election. On the other hand, crude oil experienced a decline due to weak job numbers but rebounded shortly after. However, oil prices are currently under pressure due to supply concerns stemming from OPEC and the US election results. In contrast, heightened hopes for rate cuts led to solid gains across the three major US stock indexes, which are now trading on upward trends. Now, let's look at the market prediction of the upcoming November non-farm payrolls report. Job growth is projected at between 183,000 to 202,000 new positions, with the unemployment rate expected to rise to 4.2%. Meanwhile, average hourly earnings are set to increase by 0.3% month-over-month, marking a steady 3.9% rise year-over-year. The market's reaction to this data could cause significant volatility across Forex, commodities, and U.S. stocks. That's why traders and investors must stay vigilant and prepared for potential market swings. Now, let's dive into the technical analysis of four key assets that could see high volatility around the NFP data release. Stick with us until the end for some exciting trading opportunities. First, let's talk about the US dollar index. A stronger-than-expected NFP report could strengthen the US dollar as it suggests economic growth and could delay rate cuts by the Federal Reserve. Currently, the dollar is trading above the 105.72 level. If it holds above this support, we could see it continue its upward momentum back in November, with resistance levels at 106.96 and 107.53. On the flip side, a weaker-than-expected NFP report signals an economic slowdown and potential rate cuts, which could weaken the dollar. In this case, a drop below key levels could lead to declines toward 105.17 or 104.61. Moving on to GBPUSD, if the NFP report surprises the market with stronger than expected data, the dollar will strengthen and put downward pressure on GBPUSD. The key support levels to watch for will be between 1.2601 and 1.2574. Conversely, a weaker-than-expected report can weaken the dollar and boost GBPUSD. The resistance for the pair will then be around 1.2802 to 1.2828. On to the next, gold is currently hovering between $2,606 and $2,666 ahead of the NFP report. A stronger-than-expected NFP report would likely strengthen the US dollar and potentially push gold prices below the $2,600 level, with key support levels at $2,586 and $2,565. Conversely, if the report underperforms, it may cause investors to seek safe haven assets like gold, pushing prices higher and testing resistance levels. Looking at the Dow Jones Index, a stronger NFP report could boost investor confidence and lead to immediate gains in the index, with resistance levels at 45,440 and 45,623. However, if the NFP report is weaker than expected, concerns about an economic slowdown could cause sell-offs, and the index could face downward pressure. If the Dow futures breaks above the 10-hour moving average, the index could target levels around 44,295 or 44,075. The above recommendations are only for your reference and should not be considered trading advice. If you find this video helpful, let us know below and remember to like and share. Don't forget to click the subscribe and notification buttons to keep up with the market updates. See you next month.